Hi everyone, it's Evan here from the Trade Risk on Wednesday, January 18th with a midweek market recap video. We're going to cover all of the major markets, current market environment, sector analysis, and then maybe a few individual names towards the end of this video. It's a lot of the same levels and ranges that we've been looking at for the past days and weeks now, so this video might be a little bit shorter just because it's the same sort of levels and narrative that we've been discussing over the past few market recap videos. So let's get into it though. S&P 500 SPY ETF finished up almost 0.25% today. You can see back up towards the top end of this range. We're staying resilient, holding up near those highs. Let's take a look at where we started the week. That was yesterday's action. It was a holiday shortened week. So Tuesday was the start of the week and we had a gap lower, tried to push up, tried to push down, and we really just closed exactly where we opened. Today we reversed that action and we got back to almost flat on the week. If we go to the weekly chart, you can see this is the 6th week in a row now. We are just hanging up near highs. We're in an uptrend. We're not doing anything wrong. There's just not a lot of momentum. There's not a lot of enthusiasm behind this market. We're still waiting for that catalyst to kind of break us out of this sideways range, and it's a bit of a wait and see mode. If we look at the levels, we're still looking at about 227.50. If we start to get above there on the SPY, that would get us towards new all-time highs. That would be a signal. That would be interesting, and that would potentially get the ball rolling back to the upside. And on the flip side, on the downside, 225, if we start to break below there, that was last week's lows. You could be a little bit tighter and start to already use this week's lows at 225.75. Anything in this general, it's a tight range. It's a 2-point range. So as we start to really sway in between there, and if we can convincingly close up or down below either of those extremes, I think that's something to take notice of. That's something that might start to snowball fairly quick, just given how much overlap and how much sideways complacency has been in here for the past 5 or 6 weeks. So that's the way we're looking at it. Put out a blog post today just saying that very disinterested in this market right here. It's not doing a whole lot wrong. Again, I don't want to try and be a bear. I'm not a bear, and I don't want to be an overly aggressive bull. I just really want to see the market tip its hand, and I don't want to get chopped up in the meantime if this decides to move sideways and slug it, in similar behavior, in similar manner like it has been for the next week or two. I don't want to be trying to go in there and buying momentum or buying breakouts if the momentum just isn't here right now. So dialed back exposure over the past few days. We're still lightly long this market, but we're really waiting for a little more, for some more cues. And it could come as early as tomorrow. Again, if we saw a strong sort of expansion bar, take out these highs above that 227.50 level, that would be certainly a start. That would get me interested back here to pick up some additional long exposure. Until that happens, though, I just want to be a little more conservative and just a little hands off and let us go through some of this, either earnings season, the inauguration, whatever the market seems to be waiting on. That's what I sort of want to wait on as well, and just kind of see this through before getting aggressively positioned. So that's our stance on the market. IWM, if we go to that market now, Russell 2000 small caps, this is basically the same thing. This illustrates the picture, probably even more of this tight sideways range, not really going much lower, not going much higher, not doing a lot wrong, and it's just wait and see. The NASDAQ 100, again, continues to be the leaders. This has been the same story now for the past couple of weeks. It's hanging out near highs. It's above the 8 and 20 period. This is the constructive kind of bullish action. We just want to see more of this broaden out to get more momentum and upside energy behind this market. Let's move to the TLT next. Bonds selling off a bit today. You can see now this is the second day in a row where we ran all the way up to, not in a row, but the second day in the past 4 sessions where we rallied up to this 123 level in the TLT, and then we sold off or saw a strong reactionary move off of that level. So these were the highs back here from November. Remember, we took this little trade in here as a reversal trade for a quick short, which ended up working, just a 1-day short. And again, you can see we rallied back yesterday, Tuesday, to start the week, and then we fell back down here on Wednesday. So a little bit of resistance here. Again, could be a range carving out between, say, 116, the lows from December, all the way up to these highs at 123. Maybe we need to come back down here, see if these lows are good before trying to continue higher again. So keep that in mind. TLT still in between closing now the 8 and 20. So keep that on your watch list if that is interesting to you. GLD next, you can see also hitting an area of prior supply, of prior support. Take a look back, this level at 115, I believe it is. closer to 116. These were the lows here from March, April, June, and you can see the market kind of stumbled here in late November before continuing to break down. We ran right up to it. It is a spot of at least memory right now. We're still in a bullish uptrend. You can see still above the 8 and 20 period. We've been floating higher since essentially the start of this year. So a little bit of a pullback here is nothing too out of the ordinary. We just want to make sure it doesn't extend too much further. If we start to break below the 8 period, you could get a little more concerned. The weekly trend is lower now. When you take a look, lower highs and lower lows being put in. Let's see if we can try and switch that if the bulls want to stabilize gold. That'll be interesting to see in the coming days and weeks. Silver, very similar situation, kind of ran right into this resistance here. These were the highs from December. Hit that, reversed today, closed on the lowest, maybe wants to fill this gap here in the ETF. If we go to oil, also had a very weak session today, back to the lows of the year. This is the lows of 2017 now, which again is only two and a half weeks old. But back to these lows here, if we can start to move back below 1110, you could potentially get a little more concerned here in USO that this pattern up here at highs is ultimately failing. It's a little bit early to call that yet, but for now, this is the range, $11.05, 7 cents. That's what you want to pay attention to. Follow through tomorrow to the downside. Certainly puts the advantage in the seller's favor. UNG also a little bit weak today. If this is a lower high that just got put in at 850, then perhaps a retest back down here sub $8 is on the table. The trend has been to the downside this year as we started off very violently with this gap lower of almost 11% that first day. So UNG needs to get back above 850. If it starts to really reclaim this quickly, I would change my tune and maybe we could get kind of a trade back up here to the top end of this wider channel. But as long as it stays below 850, you got to be concerned there just a bit in UNG. So that wraps up some of the major markets. If we take a look at some of the sectors that are moving, XLB, so materials had a nice bounce today. In a lot of these individual names, you can see pretty healthy looking recent kind of pullback and consolidation of this trend. This $51 level now proves to be resistance. If we can start to pop through there, that might get us some additional momentum and trend to the upside. For now, though, we're holding above the 8 and 20 period, trying to get that constructive action going and trend resumption back to the upside. So XLB starting to shape up a bit. Semiconductors, never seems to go too, it doesn't go out of favor for too long. It'll pull back, consolidate, chomp around, but then it seems to always find a bid and continue to perk up. And today, certainly no different, up almost 2%, very close back to these prior all-time highs here in the semis. So looking good. XLP, wrote about this yesterday. This nice, you could look at this as sort of an inverted head and shoulders kind of bottoming pattern, however you want to label it. But this is starting to look pretty good here. The staples, a little bit more of a defensive sector, but it's starting to perk up here. So keep that one on your watch list. Financials were certainly interesting yesterday. We saw a pretty swift breakdown here of prior lows, but today we didn't get that follow through to the downside, right? I think that's what would have been much more of a concern for this market, is if we saw the financials, roll over, continue to roll over and stay weak. That would be, a sort of a blow to this rally. But the financials did see a bit of a reversal today. Again, it hasn't reclaimed support. Maybe we'd need to see another day or two of follow through, get back in this old range. But for now, the bulls did save it in here today, and we want to see if this can continue to hold up in the coming days and weeks. It's been consolidating for a while now, so could be ready to finally, maybe start to leg higher here if this is a good kind of washout low. If not, then, we'll just need to take it day by day. XLV is also something that's worth paying attention to. Remember, this is healthcare, specifically biotech, if you want to drill down here. This was the early sort of strong leader here in 2017. Again, a young 2017 with only 2.5 weeks of traded. But this was off to the fast, quick start. We saw this nice, firm, almost 6% rally here in the IBB. And now we're coming back down and sort of retesting that breakout zone of this 272, 274 level. We want to see this hold if you want to get IBB with a sort of higher low here and to continue momentum. You do want to see the bulls step in around here. If we really roll over and take out this week's lows and get back below 274, I think that would be a little more concerning, would also be a blow to this market. So pay attention to IBB. I think that's an interesting sector right now to watch. So with that, let's look at a few individual names. We'll keep it short. Netflix, I know, is reporting, so let's take a look at that. I think they gapped higher, and I don't think my chart's showing it right now. Let me look at my other screen real quick. Yes, so it looks like Netflix is seeing a gap up. Well, it's trading right now about 145, so it's actually not even on this chart. So trading up at 145 right now. That's about 8% move higher. That could be some nice fuel to the upside that this market does need. Maybe that's what gets us to break out tomorrow, or at least get some positive traction. It's early to say. It's after hours trading. That could certainly change by tomorrow morning. I haven't seen the report numbers or anything, but a gap higher in Netflix, certainly constructive. Look at Twitter next, just because I know that had a bit of a move higher today, or at least close at the highs, and it did 1%. Still in a damaged area, but you can see if this is going to be a higher low here, structurally that is a very constructive thing for the bulls. Still very, very messy, has earnings coming up in a couple of weeks, so you want to pay attention to that and be aware of that event, but still in a messy zone, but the reversal close near the highs today is constructive. Alibaba, this one also continues to hang out here. I like the look of this, but I believe this has earnings coming out in about a week or so as well, so be a slightly derailed there, but if you start to get a trigger above $97, I think you get a nice momentum squeeze there, perhaps into earnings. If you're nimble, you can play that one. Just be aware that that's on tap. And actually, we're going to end it there just because a lot of these names do have earnings coming up so soon that, the technical levels, I don't like to look too much at them or trade them myself just because all those near-term patterns are going to be influenced too greatly by by the earnings reports that are going to be surfacing. So we'll end the video there, a little bit shorter today. Thank you guys for watching. Hope you have a great day, and I will talk to you soon.